Good morning, I'm James Lopez, President at HomeFi Corporation, and this is today's mortgage and real estate market update. We've had a kind of a busy week this week, quite a bit of turbulence in the bond market, and obviously all of that coming from the news from the Fed. If you haven't had a chance to watch the video from yesterday, May 5th, I suggest you go take a look at that. It's a great video and kind of goes into a little bit of detail about what the Fed is doing to combat inflation in different ways, two different ways, and how that really affects the mortgage bond market. So it's a good watch, and ultimately what happens is, it affects the bond market, it affects mortgage interest rates, and it affects the real estate market. So go back and take a look at that if you haven't had a chance to. I think you'll get some good information out of that. That said, the news of the day today is the BLS Jobs Report. It's a non-farm payroll report. Now, normally in a normal month, this particular news report is a pretty big market mover. This month, it's a bit overshadowed by the Fed this week, and then also the fact that the data came in pretty much as expected. So for non-farm payrolls in the month of April, there were 428,000 jobs added in the month of April. Now, unemployment rate stayed at 3.6%, so unemployment rate was unchanged. And then the weekly wages was up about 0.3%, and year over year, it was up 4.6%. So like I said, most of that data kind of came in line with what was expected, so not really a major market mover this morning. That said, as soon as markets opened today, we did start seeing some selling on the bonds, and so prices started to drop a little bit. So right now, as of the time of recording, the bond is down about 9 basis points. That's better. It was down at one point about 32 basis points, so it's a little bit better right this second. The 10-year yield is flat today so far. And what that means for mortgage interest rates is that we'll probably see them open where they closed yesterday, possibly a little bit worse, but probably where they closed yesterday. As a matter of fact, yesterday we had some repricing throughout the day in different directions. So, we opened up at a certain rate on the rate sheets yesterday morning. Throughout the middle of the day, we repriced for the worse. And then the bonds kind of made up some of those losses throughout the day yesterday. So at the end of the day, we repriced again for the better. So a little bit of volatility in the mortgage interest rates yesterday, and so we expect to see those rates open up about where they ended yesterday. Now again, this morning, the news for the non-farm payroll report is it wasn't a huge news item this morning. Everything fell in as expected. So the only thing really moving the markets today are just trading strategies, and that's about it. There's no other news that is expected to come out today. So as the market moves today, if it moves a whole lot, we'll let you know, and we'll let you know what to expect. Now next week, what to expect. Biggest news out of next week is the CPI, the Consumer Price Index. That'll come out on Wednesday, and that will show us really, kind of what is going on as far as inflation goes. So for the month of April, so we'll take a look at that for the CPI next week. But until then, I hope you have a wonderful weekend. Happy Mother's Day to all the moms out there. Hope you all have a great weekend, and we will see you on Monday.